sometimes that happens. So oil, like I said, there's Houthi rebel sort of attacks and conflict going on there. Slight drip off in the demand for oil. Market doesn't really know where it wants to go. You know, if you have inflationary fears, people aren't really buying it, obviously, because it's going to cost more and they won't be able to afford it. But within this growing momentum for oil, and again, it's around that market sentiment, you can see these higher lows, sustainably and consistently higher lows. Okay, so this drop back over the last 2 weeks is giving you a pullback to reasonable key support, reasonable key market rejection. Okay, and you can see that all along here. So you're falling straight back to this. I did a video, it's got quite a few views now. But nonetheless, I would like to read along it there in line with that growing momentum to the upside and those pushes back to that reasonable support. Okay, you can see that right there. So, yeah, like I said, key long zones there, key price action zones, and you're looking really for the continuation to the upside, potentially and hopefully beating that previous high. Now, if you do take it long, I would consider exiting at least some of it or locking in gains at this key price action level you can see here, because again, price has fallen so many times from that level. Now, the only reason why I think you may get higher is one, because of the sentiment of the market, but number two, you're not coming very far away every time. You can see where I've drawn these black arrows. There's consistent pushes back up every single time, rebound, rebound, rebound. And that's because, again, you can see the order flow or the support or the demand, whatever you want to call it in the market, is there consistently. And there's not enough to pull it back. There's not enough sentiment to cause a negative case for crude oil. So it doesn't fall farther than these candle wicks, right? So because, you know, you've hit the area so many times, again, I would adjust your risk. You've got risk on in the market, you know, sentiment-wise, so you could take it lightly long, and you may find you get a few dollars of movement. You could lock in gains and look for longer-term swings. If you get higher, like I said, near $80, just over 81, we looked at this level previously, months ago, weeks ago, it would bring you about, on this previous move, exactly halfway. So reasonable market value there. You'll find a lot of long holders will be happy for that, okay? And then there'll be others who are looking nearer $90. I would say your $90, you know, you would need big push in market sentiment, big change, and you may find that becomes reasonable at that point, all right? So 78.6 fib, you may look short at that point, but otherwise, the main point I'm getting to here is that I like it long. Now, if you do come lower than this push down previously, or this key price action area like down here, again, I would take a light entry, because, you know, there's higher time frame monthly areas that exist below this previous low, nearer $70. They'll be down at 62, down where you are here. Again, look at the price action. Look at the key price action. You can see it written all over the place. 62 and lower at like 52. You could really space out those long-term longs. But keep an eye on sentiment here, because oil is incredibly sentiment driven. That's why you get risk in the market. Again, you need to adjust your risk based on the stage of the market and the time frame of the market that you're looking at any time, because it's all correlated. It's all correlated. If you're looking at lower time frames, like your 5 minute, you're talking about moves in the next few hours. If you're looking at the weekly, it's weeks. And if you're looking at the monthly, it's months and years. Now, of course, if something drifts or moves up or down over months and years, because it takes a longer period of time, it's going to cover a longer stretch of the market. Therefore, there is going to be higher or lower risk over time. Okay, so it's all about data analysis, really, trading, because you can see, the only thing you can see is data, and you have to surmise what does that data mean for you, and how does it work in your brain? What's it telling you? And because oil is so sentiment driven, you've got to be in line with the news and what's going on at all times, so you can adjust that risk as the market goes. So that's oil.